Will the recent budget offer any relief for renters who just can't find any accommodation, or for home buyers who are finding the market moving ahead faster than their borrowing capacity is? That's what we discuss in this week's Property Insider video, including the latest housing approval building figures. We talk about what's happening in the rental markets and the auction results over the weekend, which give us a good indication of how buyers and sellers are feeling. If you want to keep up to date with our housing markets, please subscribe to this YouTube channel, and why not join over 2 million others who've watched our videos. Also, click the little bell icon so we can keep you up to date next time a new show comes out. If you're a tenant in the market for accommodation, good luck finding something to rent. And if you're a home buyer or investor, by now you'd realise the market's on the move again. In today's Property Insider chat, I discuss the current rental markets with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market. We also talk about the recent federal budget and if it offers any relief at all for home buyers and tenants. We're also going to discuss the latest building approval figures as well as the booming auction clearance results. Hi, Andrew.
Yeah, good day, Michael. And we've got plenty to discuss today. And of course, I guess we start off with the budget last week, which was a bit of a ho-hum in terms of the housing market, and by that I mean private housing market. But no surprise there, because I think we're way past any serious government action that will moderate what are clearly disturbing conditions, particularly in the rental market.
Well, one of its suggestions was, let's start this build-to-rent sector in Australia that's doing so well overseas. And they're going to offer large corporations that are going to build 50 or more apartments in a tower, hold them over 10 years, and offer potential tenants at least 3-year leases. They're going to offer them tax incentives. But what we found recently, the two completed developments by Mirvac, is that they bring them onto the market at around 25% more expensive than currently other apartments are on the market, because they're providing good accommodation. I guess this is going to free up other accommodation, but the numbers they're talking about are not going to provide any affordable accommodation like's required at the moment.
Well, that's right, Michael. And the whole point to build to rent is that it has to be supported by governments. And because tax, particularly, that's involved if you are a large scale investor relying on rental incomes, makes it unprofitable. So the only way these projects work is if governments give significant tax concessions to the big end of town.
Who's paying for those, Andrew?
Well, that's right. I mean, mum and dad pay for those. Joe and Joanna Public pay for those. And that's the point. You can sort of get, if you want really a large scale commitment to build to rent, you have to have a large scale commitment to providing big corporations with taxpayer funds, which could be just going directly into building public housing. And because obviously these are projects that are designed to make a profit, and a significant profit. Let's not get too carried away with the sort of altruistic attitude of developers. And the only way they can make a profit with build to rent is with government assistance, and that means using taxpayer funds. And as I said, you might as well just be going direct and building public housing with those funds. And the point is, when we look at the increased incentives that were offered in the budget, they come down to $10 million a year. It's just a drop in the ocean in terms of its impact on the imbalances we have in particularly our rental market, our rental markets currently. But I think it's just, again, a headline. So, we're doing something. But when you're looking, you don't have to look too deeply. You realise it's going to have absolutely no effect on the big picture. And that is if we have way too many people and way too few houses to house them. What works overseas in different housing market environments, different taxation environments, we shouldn't point to being a proof that these projects would be successful. And I'm not sure if we had a larger scale with build-to-rent projects that they'd be embraced by the public anyway.
Well, there were also a couple of things where they fiddled around the edges with the home guarantee scheme, increased funding for homelessness, welfare recipients. They got $15 a week, Andrew. That's not going to change this dire situation we've got in our housing markets.
Well, I think, and we shouldn't be surprised, Michael, and not just the Labor government. I think governments really, in these circumstances where rents are skyrocketing, and we will continue to see rents increasing generally, not just the rents for new listings, but this will work its way through the system to people who have leases in existing tenancies, agents and landlords will take note, of course, of what new listings are doing. And when those leases expire and have to be renewed, they will increase their rents appropriately. So we've still got a long way to run in terms of higher rents generally, not just with new listings. And of course, unfortunately, this is going to have an impact on inflation down the track, because our rental markets are significant in terms of how they influence inflation, the depth of rental properties as a proportion of our housing markets. So there is some way to go here. And I think what the Labor government is doing clearly is looking after those more marginalised in terms of lower income earners, how they're struggling with their rents. So those that are on, existing welfare payment recipients will get an extra up to $15 a week, as you mentioned, Michael, in rent relief, also on top of some other increases in general welfare payments, such as Job Seeker and Austudy. So that will help, but not by much when we look at how rents are increasing. We've also seen the government provide more funding for public housing. Through their NHFIC funding the fund now has been increased up to 7.5 million. And as you mentioned, Michael, some, extensions to the home guarantee scheme, which means you can purchase a property with just 5% deposit. It's extending that to friends, guardians and siblings, other family members, to be part of that group, to own the property and to get that, to be eligible for the scheme. And what I think is a good part of that new eligibility criteria is that previous homeowners, because of course that home guarantee scheme is for first home buyers, but if you've been a previous homeowner but have been renting for the past 10 years, you're also eligible. So I think that's a good move, and help to get new entrants into our housing markets, which, with higher rent and higher prices now, is going to become more problematic, and homelessness services also appropriately increased as well. So looking after the marginalised there, Michael, which I think is a positive move, but really nothing at all for the private sector.
Well, one of the things in the budget was the increased immigration intake to around 300,000 a year now. But when you take into account not just the permanent residents, but temporary residents, visa holders, students, the suggestion was we could have 1.5 million people coming to Australia, more people coming to Australia in the next 3 years. But we're just not building enough accommodation for this skyrocketing demand. And that was again confirmed in the latest building approval figures, Andrew.
Yeah, no joy there. And there won't be joy, I think, in terms of matching what are extraordinary numbers, as you mentioned, Michael, in terms of migration coming in, and they're going to have to find somewhere to live. Good luck with that. But home building approvals were down by 0.2% over March. That's the seasonally adjusted number. Houses down 2.8%. The volatile unit market, which of course we see bounce around from month to month, was up by 5.6%, but that did follow a very big fall over the February. And the context clearly is that total approvals are down by 18.3% this year compared to the same period last year. So we're still declining. And when we look at the trends, you can see the trends are clearly now falling sharply away, the longer term trends. And, as you mentioned, in the context of these remarkable migration numbers, this is very sobering news and can only really mean higher prices and higher rents. And we look over the year, only the Brisbane market, Michael, has recorded higher numbers of building approvals for dwellings, but other capital cities have fallen sharply, led by Sydney, which of course is the leading housing market revivalist at the moment with prices growth, but its new building is down by 40% this year so far compared to the same period last year.
That's a big change, isn't it? Now, you brought out recently your April rental report, and even though vacancy rates have crept up a little bit, new tenants are still having to pay more rent, aren't they?
Yes, Michael, this was the April rent report. April's usually a quieter month for rental activity because April is a big holiday month. We have Easter and Anzac Day, and that does distract tenants and landlords. And we typically see vacancy rates rise just because of those distractions over April. And that, of course, can mean some relief for rents. But unfortunately, there was no relief for tenants in terms of rent increases. We now have, when we look at the capital city, asking rents, this is for new tenancies, of course, over April. We've now seen what was the trend finalising itself in terms of the difference between units and houses in Sydney. And median rents in Sydney for a house, asking rents, are now $700 a week Michael, with rents for units now matching that at $700 a week. And we can see the gap really narrowing everywhere between house rents and unit rents, as, of course, tenants are forced to look for more affordable options. So more demand there with reduced supply, as we've been discussing, only means higher rents. And we're seeing that point where I think it's not going to be too long where most capitals do have unit rents at the same level as house rents. And over the month, notwithstanding that's a quieter, distracted holiday month, we still saw increases in house rents. Melbourne house rents up 3.8% over the month, Michael. But Melbourne's still the most affordable rental market for houses. And a lot of that is coming from a lower base because of the strong migration out of Melbourne during COVID. It did mean there was more supply and less demand for rental properties, houses particularly, as well as units. And that's Melbourne sort of in catch-up mode now, up by 3.8% over the month for houses. Sydney and Brisbane and Perth were also up slightly over the month for house rents, but the Sydney unit rents, they really increased strongly over April, up by 3.3%. Brisbane also up by 1.9%, and Perth up 2.9%. These are very big numbers for monthly increases, Michael, and it just reiterates that even during a holiday month, there's no real relief. And as we'll see, we know that actually vacancy rates also ease as we expected over April, but the annual data really is sobering. Sydney unit rents up now 40% over the past year, Michael. Of course, coming from a low base, we know that because there was higher supply and low demand a year ago in the Sydney unit rental market, which reflected those closed borders, and it was all about those inner suburban areas, but up 40% over the year. Melbourne up 25%, similar circumstances to Sydney with borders reopening. But Brisbane continues to be a very strong annual performer with house rents and unit rents up by over 20% over the past year. So it's across the board, Michael, in the major capitals, and it really is sobering news. And as you mentioned, vacancy rates were a little higher over April, which is what we expect with those holiday distractions, but they're still very low. We're talking, Sydney up, but just still at 1.1%. Melbourne had the highest increase in vacancy rates and still has the highest vacancy rates for units, but it's at 1.5%, Michael. So it's still a very tight rate there. Anything under 2% clearly is in favour of landlords and higher rents. So unfortunately, no real joy there for tenants, and some good news for landlords going forward to offset those higher interest rates. We're certainly seeing high rents coming through. And as I mentioned before, I think it's inevitable we're going to see that those increase in rents work their way through the whole rental market eventually, which is not good news because it means the lags that are involved because of leases, etc., means that we've really got all this inflation in the gun to come through, which would be sobering for the RBA.
I can see that, but it's actually been something that's been creeping up for a while. It's not just migration. Sure, we're getting more people requiring accommodation at the moment, but over COVID, there was this craving for space, and fewer people were living in each place. We wanted to have more space and live more on our own. But the decline in average household size in Australia was already there before the pandemic. And the Reserve Bank recently found out that just a 1 percentage point decline in the average household size, which happened over the last couple of years, would just on its own require 120,000 new houses, new homes, despite requiring no more numbers in our population. So that also puts significant pressure on our markets. I wonder, Andrew, whether moving forward people are going to be getting back to sharing houses, sharing accommodation, just to make it more affordable.
Well, that's right, Michael. I think another one of the questionable analytical measures from the Reserve Bank, and gee, they've got a few of those that have proven to be problematic at best, has been blaming the rental market issues on changes in household size. And I think it's just a clear demand and supply problem here. We're going to get we have surging demand now from migration, and we've just underbuilt for the best part of 5 or 6 years. And the Reserve Bank can put their hand up to that because they were part of the investor credit squeeze back in 2016 and through to 2018, which clearly pushed investors out of the market, and which is one of the reasons why I believe we have too few investment properties now. But we won't hear too much about that household size scenario because it's already starting to see them backtrack there because household sizes, as you suggested, are increasing. and we have no relief in the rental market now. So nice try, guys, but not this time.
I just wanted to interrupt this week's Property Insider chat to remind you that this is not specific property advice because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations and development management services. Go to metropole.com.au and explore your options with a complimentary clarity consultation. Well, the weekend auction market seemed to still be strong, just shrugging off that interest rate rise at the beginning of the month, Andrew.
Yes, I'm not sure, other than sentiment, that's the what interest rate rise from the public out there to some degree, but we can always use that as some sort of a catch for motivation from week to week when we do get changes to interest rates. But we've got to understand that the decisions made on auction markets are really have been made for quite some time, other than perhaps some sentiment where people are wavering one way or the other. I don't think it affects too much, to be quite honest. But we had another big weekend of auctions, Michael. We're well and truly into the back end of the autumn selling season now. We've got our holiday distractions behind us, so the market's fully focused. And remarkable results on the weekend had all capital cities reporting clearance rates above 70%. Can you believe that, Michael? So this is sort of across the board in terms of a revival in housing markets. It's not just Sydney, it's not just Melbourne. It's now all capital cities have had clearance rates above 70%. Dare we mentioned that B word, which is boom, but we're now getting close to those 80% results in Melbourne and Sydney. So we can say they're near boom time results. And as I mentioned, all capitals are now reporting clearance rates above 70%, and not just at 70 or just above, Michael. They're actually close to 80%. And auction numbers were holding up around about the same, a few more in Sydney compared to the previous weekend. Sydney had a clearance rate of 78.5%, a little bit lower than the weekend before, but almost the same. Similarly, Melbourne a little bit lower with similar auction numbers, 76.2%. Brisbane's had a bit of a pickup over recent weekends, Michael. It had another 70% plus clearance rate on steady listing numbers. Adelaide, as usual, 80% plus. It keeps on tracking at 80%, but a lot fewer auctions in Adelaide compared to the previous weekend. And Canberra has also started to pick up, Michael. I think it's catching a little bit of that Sydney energy, the Canberra housing market, and it recorded another 70% clearance rate. That's back-to-back results when it's really been tracking around 60% for most of the year so far. So again, we sort of emphasise that when we look at a year ago, we're seeing auction clearance rates well above where they were a year ago. And of course, that's when we did have our first interest rate increase for 10 years. So maybe that did have an effect on the market, which I'm sure it did because of the wave of negative predictions in regard to higher interest rates. But Sydney and Melbourne are clearly higher than where they were a year ago. Similarly, Brisbane, Adelaide is higher so far this over May compared to May last year, and also Canberra. So all our capital city markets are tracking higher over May so far, Michael, compared to where they were a year ago. And it is remarkable that these auction clearance rates are now starting to head towards 80%. So will we see 80% over coming weekends? Perhaps we will, because this is actually a stronger part of the year, the back end of the autumn selling season into June. So maybe we can expect even stronger clearance rates, but notwithstanding that, these rates are very much for sellers, and that's why we're seeing prices rise. We shouldn't be surprised, Michael.
Well, we've seen increased buyer confidence, but clearly we're also seeing increased seller confidence. Yes. I remember in the middle of last year, sellers, particularly in Sydney, were withdrawing their properties from auction. Remember, a week before auction, they didn't see that there was going to be much interest and they pulled them off the market. That's not happening at the moment, is it?
No, it's not, Michael. And we're certainly seeing a concerted and consolidating recovery now across the board in all capitals. Despite those higher interest rates, it does reflect a booming economy. with wages rising strongly, the lowest unemployment rate basically on record, and plenty of confidence around there. And of course, the one negative is those poor doomsayers that look pretty silly at the moment, Michael, don't they?
Yes, they do. Well, they've gone quiet. The bears have gone back to hibernate in their cave. And Andrew, I think we got through one show without discussing what's going to happen to interest rates. So maybe we'll discuss that when we catch up next week, Andrew.
Yeah, we'll do that. Next week, Michael, we might have a look at how the regions are performing as well. I think that could be interesting.
That would be very interesting to see after they boomed during the COVID pandemic. Yeah. Thanks a lot. Catch up with you next week.
Thanks, Michael. Bye now.